The continuation rally failed, and now we run the risk of breaking trend just like we did on 313. Good evening, folks. It is 3:30 late night. The futures have opened, and after a pretty bloody Friday, the market is opening even lower than that by about 1%. A couple of weeks ago, we were tracking to see if there's a change in behavior, a break in trend. And after a couple of strong Mondays, the price action fizzled and Friday ended in extreme disappointment, which brought us back to the base of 313. And that's exactly where we are right now. After our action, you're looking at the S&P. We are within an inch of losing the base from 313. And that technically would constitute the start of a break in trend. The bulls cannot afford to lose this blue line that you see in front of you on a closing basis, which means close for the day and then the next day not being able to recover it and hold. And the downside from that can be as much as 8 to 12%. This doesn't mean I short everything, because after a sharp descending wedge like this, there is the tendency to snap back rallies. So what do we do this week? I've been pretty consistent with my message. Be patient. For the bulls, I've been saying be defensive. So that should continue, which means I don't add to current positions. And I would use rallies to fix problems, not chase. That has been a winning strategy. Also, defense means I would own defensive positions. The one I've suggested almost exactly to the hour was to buy some VIX calls last week when the VIX hadn't spiked yet. It is almost 22 right now. As for the bears, I am still in the short the rally mode, but not blindly. If something has fallen into support, for example, NVIDIA is trying to hold 106. I don't want to short it at 106. But other stocks, if they rally up against resistance, I wouldn't mind shorting them, including indices. And for both the bulls and the bears, I have to caution you. The emotions are at an extreme level because of headlines. We have somehow become completely dependent on headlines as a market. So the headlines, by definition, are emotional. They want to invoke emotions. So in order to neutralize that effect, I must also focus on the levels. I'm showing you all the ETFs, or at least the major ones. And I would worry about one of the biggest drivers of late has been banks, or at least the XLF, which includes Berkshire and Visa and MasterCard, which are not quite banks. They have a lot to give back. So there might be some extra weakness there. Same story with the XLV, even worse because they do have an enemy out there. The industrials are a little bit more humble, so they have less fat to give. The staples, Pepsi, Coca-Cola, soap companies, those have a lot to give back. They are still trying to break records because the perception is that they are safety and people go into them when they're hiding from a falling market. Bottom left, we have the materials. They're in the same position as the industrials. And, the energy sector is awfully strong, given that this president wants to drill. So energy prices, shouldn't they be falling? So keep an eye on some weakness there to come. So let's talk levels. S&P, SPY, 550 through 548 needs to hold. And zooming in, rallies into 564 will be met by sellers, stronger sellers at 573. If we get to 582 through 585, I expect a lot of resistance there as well. I mentioned that the NASDAQ is worse. You can look at it and you see how they're barely hanging on to the lows from 313. If we don't bounce really quickly Monday, I think these guys have a lot more to give. Now, rallies may come, but they will face sellers at 478 through 484. If by some miracle you get to 491, I would expect that to be an exit area for the short-term profits for those who buy this dip. The small caps have not had a good statement in a long time, so this is no different. They are close to the 313 lows as well, but they have been consistently selling rallies, and the trend is definitely broken here. 204, 209. If by some miracle you take those out this week through Wednesday, anything above 214 will be met by selling. Meanwhile, the bulls only have one line to hold. I have also been focusing on Bitcoin to give me a statement on risk appetite globally. It too is having an emotional reaction this evening on Sunday. I'm not sure to what. If money around the world is worried about itself, then it would not be buying Bitcoin. It seems that the bids for Bitcoin are waning also. I think it's important enough to reiterate the message for the bulls to not jump in and add to current positions. I don't care how good the stock looks at the current price and how far away it is from the price I bought. I don't have enough information to say that this might be a bottom where I can double my position.